Welcome to our weekly Forex forecast. Before we get started, I need to point out trading Forex is a risky endeavor and not suitable for all investors. My name is Jay Norris. I've written a couple of books on trading which were published by McGraw-Hill and also serve as the textbooks for our course at Trading University. Let's get to the charts. First market we're going to be covering is the Australian US dollar. The Australian US dollar, you could see it clearly pretty balanced up. That secondary pattern's up and that short-term day-to-day up also. Of course, the longer-term day-to-day still down. What really surprises me is given the extent of the sell-off in the U.S. stock market, given the extent of essentially the shakeout in U.S. stocks, that the Aussies is recovered pretty well. And, we talked about that last week also. And finally, it did come down a little bit, but it's really holding levels pretty good. If you're a longer term bull on this market, you can see that there's still plenty of support down below. And again, I just have to marvel that they didn't take this market down further. We were hoping perhaps to get a shot at picking it up somewhere between maybe 99.5 and 101. We think that's a pretty good zone of support down there. It hasn't even gotten to that shorter term day-to-day support right there, in the 102.75, the 102 handle. So pretty tough looking market overall. Aussie dollar. Next market, Euro US dollar. Here's a market where you have a little bit more clear picture. You can see you have the majority patterns down. You had a day-to-day shift finally. They shifted. That day-to-day pattern was pretty stubborn. You just shifted it there. You closed a couple of times below it intraday, and that's what shifted it. That usually occurs when you get a major shift like that. You're not looking for a reversal right away. When you get a shift like that, you go into sell the rally mode. So you let it shift bearish, then you're going to look to sell the next rally. You had a little bit of a rally, up towards 28 even or so, and we'll see if that's all she has. But we're back in sell the rally mode. Put the top in here. We had a few sell signals all along the way. You never could take out that isolated high right there. So those sell signals worked pretty well. Following our method to the T, you would have come out of a portion of that right at the old day-to-day zone right here, right around 127. 127.05 is the level. You never could close below it on a daily, and that was interesting. So I guess that tipped you off the little bit of a short covering rally there. But we're definitely in sell the rally mode now that we've shifted that day-to-day pattern lower. So we would welcome a rally to sell to add to those longer term shorts. But you would have come out of a portion of the position and you'd certainly have a break-even stop in there now. And we're kind of hoping for a rally against that longer term position to reposition ourselves. So hopefully you can maybe take out some of these shorts that have a lower tolerance, a lower threshold of pain, give them a little rally here to run them out, and then give us the opportunity to sell at a more lower risk level for us. So looking forward to a rally, even though it's a downtrend, we wouldn't mind shake some shorts out here so we can get back short, get some more on ourselves. Next market we'll take a look at be the pound dollar. Pound dollar, tough market, completely different than the euro, by the way. You can see the secondary patterns up, and more important, the primary patterns up. So once that primary pattern's up, that's a big one. And here's another one where we wouldn't mind seeing a continuation lower, similar to the Aussie, so we can maybe take a shot at picking some up on longer term support, such as closer to 157 even, in line with that secondary pattern support. We'll have to see. I think there's some more downside here. We don't mind being short this guy, intermediate term or near term, I should say, but as always, when you can see you're sitting on support like that, there's always the threat that some of those Johnny-come-lately shorts, the shorter-term traders who happen to be bearish on this market, who happen to be short this market, we know that they don't have that threshold, that risk tolerance that a longer-term player would have. So you always have the possibility of them running for the door. You get a little bit of a hiccup here, and you see those shorts get run out, and that creates a short covering rally. tough to play it because short term it's down, but intermediate term we're more interested in that. We're more interested in long term. We respect that primary pattern. We're looking for a longer term buy setup overall, but short term you have to keep working that. You have to keep working the sell side because that day-to-day pattern down. The day-to-day pattern, by the way, intraday traders, for swing traders, definitely for day traders, that's your most influential pattern out there today. A full 90% of financial futures happen to be day traders. So you see the influence that these short-term traders have on the market. Even the bigger players, the bank players, they employ traders, and these guys are expected to come in and make hay every day. So the shorter-term traders exert a great deal of influence on these markets today. So we have to be aware of that. Longer term, we wouldn't mind a little bit longer term buy setups here, but short term, I think you still have to focus on the sell side. Dollar yen, big market to follow for sure. Look at that big market. You know, we've been bulled up on this guy, been writing articles about it. It's tricky. You know, it just blasted off like that. What can you say? We think this is a big occurrence. We're calling this the alpha market currently. I like it. I like it. It's trading nicely. You have pretty good measured retracement here. It's not like just this blinding runaway rally since we saw in February and March. You had a very strong October, actually pretty predictable retracements along the way, pretty well behaved, and then you got a nice correction in the beginning of November, and then it just took off again. So pretty bullish market. Secondary pattern is down. I understand that, but your short-term secondary is up, and that all-important day-to-day up. And as we said before, that day-to-day pattern is extremely important for your swing trader or any kind of day trader, any kind of short-term trader. You have to heed that day-to-day pattern. So we like yen overall. We're always interested in potentially buying a dip here. Here's the old alpha market, the stock market, and pretty good shakeout here, pretty good retracement there. We tend to think that longer term players, your strong hands in the market, your institutional players, your sovereign funds, they're probably starting to get pretty interested at going back in on the long side on this market. It was a nice correction, nice shakeout. Now maybe the time to get back in there. I know that's how they're thinking. That's definitely how we're starting to think also. Wouldn't mind seeing a little bit more downside, but you have to give serious consideration to start sifting through stocks to see which are good companies and that maybe they're just a little bit overcooked on the downside. I think it's an opportunity to start looking at real value here. So that's what we're looking at. Hey, thank you so much for coming to spend a little time with us. I'm the Director of Education at Trading University. Here's the website if you ever have any questions. We'd be happy to field those for you. We always encourage you to come on the site, go to our market commentary, and you can see this video among other things as far as the blogs, the articles we post on the blog. So we look forward to seeing you there, and we'll catch up with you next time. Thank you so much.